Hey guys, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the technical charts and try to understand what happened during the trading hours today and also plan for a better trading plan for the next day. That's January 30th, Tuesday 2024. So we had a sharp bounce up in Nifty, especially 400 points gain, and we have a rising VIX as well. Let's try to understand why. What can we expect for the coming days? I will wrap up here. Take a screenshot of this if you want, if you have some audio issues. But we'll come back to this after we look at the charts to begin with. Let's get to the charts. First the Nifty. And here we go. Look at this. This is a Marbozo. It's a wide range bullish candle. Absolute bullish move. Absolute bullish move. And Banknifty. Again, we have a wide range bullish candle after a gap up, but met with the resistance at the 100 exponential moving average and give up some of it, but that's a 600 point nearby gains, and Nifty has got a 500 point plus gains. And the head and shoulder pattern that we're talking about seems to be negated after the price has moved much about the neckline of that. And remember, we were retracing within a parallel channel and then down 4.5%, took support near the 50 exponential moving average, bounced up, then found it difficult to sustain that on Friday, and then the big surprise bounce up. There is some kind of sort of consolidation also that's happening, so it's crucial for the price to move and close about this consolidation zone. Right on the Banknifty, it's already breached the previous channel, dropped from that. Luckily 200 AM gave some support, but it breached that twice and then bounced up and then continued the bounce up to find some resistance at 100 exponential moving average. Now the question is, the second yellow channel consolidation zone has a lot of way, another 100 points to reach 46,500, and a close above that is crucial. You know why, right? So, and that's what it is. And we see that while the trailing exponential moving average is cleared smoothly by the Nifty, Banknifty could not clear the 50, 100 or 20. None of those. It still remains below the 100 exponential moving average, just like yesterday's, in spite of the 600 points move. So that's the thing. Now let's look at the resistance support levels of the Nifty. First the gap is 21,969. That's the first resistance. After that 22k, a big rounding number, and then 22,125, which is all-time high. Those are the resistance for the next day. Downside, you could find support at 21,350, which is a 23.6 Fibonacci retracement level, and then after that you will have 21,130, which is 50 exponential moving average, as well as the consolidation bottom swing low. After that you have 21k. 21k is a big rounding number, that can be good support. So 21k and 21,950 immediate support resistance and subset downside. Down Banknifty, the first resistance would obviously be the 100 exponential moving average, which is coming near 45,650 nearby zone. So if that is clear, then we'll go to the confluence of the 20 and the 50 exponential average is coming at 46,500. It's very crucial. And above that you have 47,000. In between we will have some resistances at 46k also. Make a note of that. Downside, the first support would come in at 44,600 nearby, where the 200 exponential moving average. So if that is breached, you go to the 43,950. Then if that is breached, you go to the 43,200 and then 42,000 downside. That's the Banknifty support resistance levels. Let's just get back to the wrap up. Here we go. 1.8% gain, nearly 400 points up in single day. One of the biggest gains in recent times. 385 points up. About 21,725 positive close, wide range Marbozo candle, extreme bullish candle. Remember, retracement is only 4.5% of the all-time highs. And now heading back to the trend line channel top, closed about the 20 exponential moving average. Remember, we're in the middle of a 31% of rally. Banknifty on the other hand did close positive with a decent 600 points nearby, 576 to be precise. Closing positive, the white range bullish candle as well, but it is still below the 20 exponential moving average, 50 exponential moving average, and 100 exponential moving average. It's still below that, so that's something to be cautious. So the Banknifty will be able to manage to cross above that is a question. Intraday, it is trending up more on the Nifty, but it was not that trending up more on the Banknifty. It came, gapped up, gained, and then met with resistance just under the 100 exponential moving average, and then went range bound. Still managed to close decent 600 points up. So there is a divergence with respect to the price moves that happened, price action that happened after the initial few hours, right? Now, if Fyers have become biased, that has just come in. I will update that. The Fyers were turned buyers, right? And they have turned it after being sellers for how many days? 7 consecutive days, and they sold 35,000 crore in the cash market. DIS also bought into the nearly 3,000 crore. So net was big buying that has happened from the institutional side, right? Although the FIs bought only 110 crores in cash market. We're talking about cash market, right? First and support levels you already seen, I'm not repeating that, but momentum is still sideways. It does not climb into the bullish zones and Nifty. And Banknifty also does not climb above the RSI 40. It does not climb down to the bearish zones. It is still there. The trend indicator ADX that we're using, that is also having a trend in the bearish zone. So it is not crossed over yet. So tomorrow is going to be very crucial, which will tell whether this move today would sustain or not. The VIX is saying something else. Look at the 13% spike when the market is moved up. VIX should have cooled off, but it has spiked up 13% and it's at 15.6. Can you believe that? This is divergent, and therefore there is a possibility that today's move may not sustain. That's probably what VIX is indicating. Regardless, VIX is rising up to the 16 level, so after a very, very long time and heading towards the 20, you have trouble. You have to be cautious. You have events of budget and Fed event, that's confluence coming on Feb 1 or 2, right? So be careful. Studying the Bollinger Bands, it's indicating contraction. It's having a bullish bias also. That's a shift. So Nifty is indicating more up moves, but Banknifty again divergence. It's weak as compared to Nifty, still weak. Downside expansion continues to be there, and Bollinger Bands may predict that further up downside that may happen until it has a bullish bias above the 20 median of the Bollinger Bands, right? Technically, it also lost most of the momentum and the trend ever since the crackdown happened, but today's move has gained some of it, but not of it, because the momentum is still sideways. The Nifty and bearish still on the Banknifty. But we had a 4.5 to 8.5% of move on the Nifty and Bank, respectively. But more correction may be due on the Nifty. It's only 4.5%. You never know. So once again, if the Banknifty is breaching the 200, the expansion moving average, may have trouble. But anyway, the head and shoulder pattern that we are talking about the Nifty is no longer valid because it is negated. If it was working, then it would have given a downside up to 27. Everybody have a gap. We have got a good decent bounce today. There's a probability that it can move further up, but Banknifty has to catch up. That's the only thing, right? Market will do all kinds of things, upside and downside. Sharp big moves can happen because we have two major events that's coming in Feb 1, so be careful. Across industry sectors, you see a green today, except on the FMCG. All sectors are on the sideways mainly, except the auto and the firm, which is mainly in the bullish momentum in the short-term daily charts. If you look at the heavyweights that contribute maximum, it's all green except Infi, TCS and ITC is having a flattish trend today. Infi and Reliance are the two stocks that is maintaining the bullish momentum, two leading Infi and Reliance. And today's move was solely because of Reliance, 7% up move, bullish momentum. Breakout from the consolidation of what's happening in Reliance. Very interesting for you to look out for the Reliance charts first. And on the contrary, HDFC Bank and ITC have fallen into bearish momentum. Two stocks gain from them, two stocks in bullish momentum, others in midway sideways. So it's a mixed bag with respect to the heavyweights. Usually this is a flattish green consolidation at the very top. It had a similar high levels, now consolidating. On the spectrum, the rupee remains weak. Gold is falling after attempting to move further up from the bottom. Gold is consolidating after trying to move above the all-time highs earlier a few weeks back. Now it's at the top, but it's consolidating. Green spiking, probably. So every dip, as I say, is an opportunity for investors to invest in long-term on quality stocks in SIP mode. For directional traders, you just have to wait for both the time frames, short-term and long-term. Short-term and medium-term, not long-term. That's daily and weekly. So these has to be in sync. Both have to be bearish for us to go directional on the downside. Both has to be bullish. It's above RSI 60 for us to go directional upside. If both are sideways, that's the time when we can do the non-directional trading strategies. Shift and optimize your strategies accordingly every week. Right? And stay cautious about these events and the spike of the VIX that's getting into the 20. If it is getting to 20, stay out if you're not a professional. Otherwise, cut short drastically your position size and manage your risk. The Nifty expiry is there to stay tomorrow. 19,800 is where the highest put and 21,000 is where the highest call writing is seen. Put correlation is not bullish enough, 0.85. Right, Banknifty is the deciding factor for Nifty. Keep that in mind. Watch out for Banknifty cues on the charts than the Nifty charts for us to try to get some hint on what the levels are. So, but the levels of the options, as of now, the options is that for the next expiry. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.